Well, Yangtze Power is just one of a number of companies from the world's developing economies that suggest that flotations will continue to be driven by the world's emerging markets, though IPO activity has actually fallen quite a bit from the last year. Ernst & Young says in its recent report that the emerging markets do continue to power ahead. China's been leading the way in terms of both value and volume, raising about $6.2 billion worth of capital last year. Let's get more from one of the authors of the report, Mark Jarvis, the IPO partner at Ernst & Young, is in our London studio. Good morning to you.
Morning.
Talk to me about these emerging markets very much powering ahead. Are we seeing a dearth of IPOs given the kind of current market conditions and the concerns about the future here in the West? And that's being countered by the IPOs we're seeing in the emerging markets?
I think the IPOs globally are still continuing to be driven by emerging markets. You're absolutely right. Certainly 7 out of 10 or 15 out of 20 of the last IPOs in the last quarter were from emerging market companies. But they are listing in 3 key stock exchanges. That's London, New York and Hong Kong. And so we're seeing it driven by emerging markets, but London's still picking up something like 16% of the value raised, the money's raised last quarter was in London. So those 3 stock exchanges, but emerging markets driving everything, yes.
So we're talking sort of emerging market companies listing their shares on developed markets already.
Yes.
Talk to me about premiums, because it's interesting. Half of the fund managers who come on this show say
yes.
they'd rather buy an emerging market company or company with emerging market exposure if it's listed in London, and they probably would pay more for it. Is that what the survey is showing?
Yes, I think that's true. Premiums is a very interesting point in that valuations are significant in China in particular. When you do the methodology to come up with a valuation, you're stuck with this big gap at the top and you say, well, this is a China premium. Basically, you're paying that premium, which can't be mathematically evaluated just to get in the Chinese market. So premiums valuations is a very interesting topic. I think Russia, Brazil, China, India has the same issues on valuations. In terms of UK, yes, I would say the UK market slightly more developed in its corporate governance, therefore people feel more comfortable to invest in emerging markets through a market that they understand.
Of course, China is an excellent case in point, but it's also, there's a specific reason for that. It's because foreigners can't buy shares listed in mainland China. They can only buy shares that are listed in Hong Kong, otherwise known as the H shares versus the A share market. Talk to me about Russian companies listing in London, especially these commodity plays. Are we seeing a lot of Russian mining companies listing in London and that type of thing?
Yes, it's mining, oil and gas, the natural resources sector. We'll have to see what happens in that. There's some new legislation that's being brought in that was announced last week about what percentage can be listed overseas, what percentages can be acquired by foreign ownership. But yes, that sector, Ukraine, Kazakhstan, Russia, is the mining, oil and gas, natural resources, certainly.
And what about farming companies? I assume there's more of those coming to the market.
That's the new sector, of course. What we've seen with the commodities has been high prices. And when we think of commodities on stock exchanges, we've thought of oil and gas, coal. But now we're beginning to think of grain. We'll have to see whether those grain prices remain at that high level. But if they do, then I think there's a new market there opening up in the agricultural commodity side, yes.
Of course, Mark, I'm sure you're expecting this question. How sustainable is this kind of growth in emerging market IPOs?
Well, I think certainly if you look at the Chinese model, there's a long way to go. If you see the IPOs announced on a daily basis, something like 3/4 of them are from China. So it's really being driven, and there's no slowdown yet, no slowdown at all as far as we can see. The prices obviously are making people who might go for debt or private placement go to an IPO, but if the prices drop down, they still need to grow to meet those huge demands that are in China.
Okay, Mark Jarvis, thank you very much for joining us there, who's the partner at Ernst & Young and helped pen that report. As we were saying, 15 out of 20 IPOs actually came from some of those emerging markets in the second quarter.